Okay, so what is a data center? For those of you who are new to the data center, I'm sure you'll be familiar with the use of applications such as Netflix, Facebook, Instagram, and TikTok. Data centers play a critical role in the digital economy. Your day-to-day activities such as movies and music streaming, scrolling through social media, online shopping, or even having calls on video conferencing platforms all generate a lot of data that are processed and stored in a data center. In a nutshell, data centers are essential infrastructure that provides the necessary power, cooling systems, as well as IT and networking equipment to ensure that the environment is highly conducive for the servers to operate at optimal levels with zero downtime. Slide. Keppel DC REIT is the first and currently still the only pure play data center REIT listed in Asia on SGX. We have a portfolio of assets located in key data center hubs across Asia Pacific and Europe. That said, we have a global investment mandate and are seeking to expand our portfolio globally. Similar to many REITs, we do not undertake development of data centers. Our sponsor, which is Keppel TNT, a subsidiary under Keppel Corp, develops and operates, while we buy and hold the stabilized assets. Apart from the sponsor assets, we also actively pursue third-party deals. Hence, other than Keppel DC Singapore 3, Keppel DC Singapore 4, DC1, all the other assets that we have actually announced, or rather bought after our IPO, were actually from third parties. We have been steadily growing REIT's portfolio. This year alone, we've completed 2 acquisitions in Europe, bringing our assets under management to around 2 billion. This is a significant growth from our initial portfolio of 1 billion as at the IPO date. All the acquisitions are DPU accretive, and this has seen us deliver consistent DPU growth since IPO. Unit holders who have invested in Keppel DC REIT since IPO would have seen a total unit holding return of approximately 320% to date. The total unit holder return year to date was also strong at approximately 40%. We are also very pleased to be included in its Times Index, or the STI, in October this year. This inclusion marks a significant milestone in our growth journey since our listing on the Singapore Exchange. Best and focus in growing Keppel DC REIT to greater heights to be recognized amongst equities globally. Moving on to the next slide now, comprises co-location facilities which are multi-tenanted, providing a diverse client profile, as well as shell and core and fully fitted data centers, which are master lease assets that provide income stability with longer leases that as long as 30 years. Co-location leases contribute slightly over 72% of our rental income, while the master lease assets contribute around 28%. Our business model is largely focused on wholesale co-location. Our largest customers are the internet enterprises, which are widely referred to as hyperscalers. We do not disclose the names of our clients, but just to give you some examples of hyperscalers will include the likes of Amazon, Microsoft, Google, Facebook, Alibaba, and so on. Going into our results for the first 9 months, as I think you can see, this is a quick overview of our third quarter and 9 months 2020 business updates, which I'll go through in a bit more detail later on. On slide 9, the financial updates. We continue to deliver strong financial performance in third quarter 2020. We delivered a 48% growth in distributable income and also a 22% growth in DPU, largely contributed by acquisitions in Singapore and Europe. On slide 10, the manager maintains a prudent capital management approach to mitigate the REIT's exposure to fluctuations in interest rates and foreign currency exchange rates. We have locked in 68% of our borrowings through floating to fixed interest rate swaps, with the remaining unhedged borrowings in euros, which are currently trading in a negative region. Our forecasted foreign source distributions have also been substantially hedged to the first half of 2022. Our average cost of debt remained competitive at 1.6% per annum, while the interest coverage ratio remained high at 12.7 times. Our aggregate leverage remained at a healthy level of 35.2%, which will give us a debt headroom of approximately 249 million before we reach our internal cap of 40% and over 920 million to the 50% regulatory limit. Moving on to portfolio updates. The data center industry remains resilient in this pandemic and continues to see growth from hyperscalers, with enterprises also moving to cloud. In the last quarter, we saw strong leasing momentum with good take-ups across our co-location facilities. We secured new take-ups in Singapore in Keppel DC Singapore 1 and 2, increasing the occupancies to 91% and 98% respectively. The space in these two assets were handed over to the client on the 1st of October. In Dublin, we secured a new tenant at Keppel DC Dublin 1 following the practical completion of AEI works to improve energy efficiency and to increase the power capacity at the facility. Following the new take-up, the occupancy at Keppel DC Dublin 1 increased to 81.1%. We're also pleased to share that the additional data hall that we are fitting out at Keppel DC Dublin 2 has also been committed for a client expansion. This space will be handed over to the client once the fit-out works are completed next year. In Brisbane, Australia, we secured an early renewal at iSeek Data Centre, lengthening its WALE from 6 years as at 30th of June to 10.7 years as at 30th of September 2020. Keppel DC REIT's portfolio occupancy rate remained healthy at 96.7%, with a long-weighted average lease expiry of 7.2 years. On the next slide, apart from seeking growth through acquisitions, we have also embarked on several asset enhancement initiatives to further optimize portfolio returns. In Singapore, we are fitting out the existing share and core space at DC1 and converting a large portion of the vacant non-DC space in Keppel DC Singapore 5 to DC space. This involves bringing more power on site, and this additional power has also been fully committed by an existing client in the facility. In Ireland, we've achieved practical completion of the EI works in Keppel DC Dublin 1. We are also converting some utilised space at Keppel DC Dublin 2 into a data hall. In Sydney, we are developing IntelliCentre 3 East Data Centre on an existing site that we already own at IntelliCentre 2 Data Centre in Sydney. Both assets will start a fresh 20-year lease with Macquarie Telecom once IC3 East DC is completed. We expect these AEIs to boost our income. They are completed and the space handed over to our clients. Moving on to the industry outlook, the widespread lockdowns during the pandemic have contributed to an accelerated adoption of digital technology. Indeed, COVID-19 is changing the way that we work and live and also hastening the pace of cloud and technological adoption for enterprises and individuals. I expect many of these trends, such as telecommuting and automation, to become the new norm and will continue post the pandemic. These trends will support demand and growth of the data center market, reinforcing the resilience of this sector. At the same time, this resilience and rapid growth of the data center market has attracted a lot more competition for assets and capital. That said, the barriers of entry to provide new supply in the center sector remains high, especially for well-supported quality co-location assets. A good quality data center is designed to high technical standards for zero or minimal downtime. In this respect, most of our co-location assets are operated by our own team at Keppel Data Centers, thus ensuring operational excellence and quality. I'm actually now on slide 15. Notwithstanding the increased competition, we remain confident of Keppel DC REIT's growth plans. Our track record and ability to leverage the Keppel ecosystem in providing end-to-end solutions for our clients, from project management to facilities management to client networking, puts us in a very strong position to benefit from the growth of the data center market itself. On slide 16, we believe that we are well positioned for growth and we are able to benefit from the growth of the data center market, supported by its established track record and also enlarged portfolio of assets. We will continue to leverage our competencies in investment asset management, and also capital management. And to build on Keppel Group's capabilities in project management and also facilities management to seek opportunities and strengthen our presence across key data center hubs globally. With that, I've come to the end of my presentation.